All right, good evening once again, and welcome to our weekly webinar that is week ahead with Religare Technicals. So, in this webinar, just for the benefit of all, like those who are joining us for the first time, we talk about the performance of the market, how the markets performed this week, what all important factors, what all important triggers that we have for the next week, the formations, the technical formations for the Nifty and the banking index, and what all stock sectors that you should be be on your radar for the next week. But before that, quick disclosure that in this presentation, whatever we are sharing is just the market insight, our observations on the indices, on the stocks. These are not trading recommendations, so please take a view from your investment advisor before executing those trades. Now we'll begin with the presentation, and first and foremost, the performance of the global main indices, both Sensex and Nifty. So last week was a good one for the equity market. In the last, in fact, 3 trading sessions, markets are inching higher. So except one trading session, we saw that the bias remained on the positive side, and both Nifty and Sensex could manage to gain nearly 3% each. And that is reflecting, across sectors. So one sector which is constant from last several weeks is auto. The auto index made a new record high and gained over 3%. But other than auto, FMCG, reality, banking, financials, all these sectors contributed to the move in the passing week. Now coming to the stock specific movement in the Nifty 50 basket. So the top gainers were Titan, HUL, ICICI, LT, and UPL. On the other hand, energy energy largely, because last week also we have discussed about this, that metals and energy something that would continue to remain on the back foot, and ONGC, Reliance, they were among the top underperformer or top losers in the Nifty 50 basket. At the same time, we had SDFC Life, Cipla, and TCS, which also ended lower. But by the way, we have TCS numbers today, which is going to release post-market. So let's see how the stock is going to perform. Now coming to the indices and what all important levels that you should keep in mind for the next week. So this is the Nifty graph that you can see on your screen, and earlier we were discussing that Nifty should hold and cross 15,900 for any further recovery towards 16,200. So yes, we have achieved that area. Nifty surpassed that level of 15,900 and tested 16,200 level also in this week itself. And next indications are favorable. Couple of factors which are contributing is that earlier it was only auto and FMCG which was contributing to the move. Now the major sector which holds weightage in the index, banking and financials, they have also started participating in the move. So that's why we are seeing this traction continuing. So what's our view for the next week? So the view is simple, that we expect this rebound to extend further, and this zone, this red and green line that you are seeing, these are the medium and long term moving average, which coincides close to around 16,450 to 500 zone. So that's the area basically where Nifty has the next major hurdle. So 16,500 is something that you should keep a close eye on, when it comes to index for the next week. In case if it reaches the same, then this red line, this 16,800 zone, that would act as a strong resistance. So 16,500 to 16,800, that could be the area basically where Nifty is going to face resistance. Now, since we are saying that we expect the rebound to continue, which level Nifty should hold? So 15,900, which was earlier the resistance, should act as a support now, should act as an immediate support, and then 15,660, this red line, close to around this area, we have the next support. So broadly, this is the area basically where, in case if there will be any profit taking due to some reason or the other, because we have the earning season, beginning of the earning season, so market is going to react to the TCS numbers in the early trade. And IT counters, they are still reeling under pressure. We have not seen any major participation yet. So in case if there'll be any positive reaction, that would help the index to inch towards 16,500 or maybe higher, and vice versa in case if there'll be a dip. The 15,900 and 15,650 is something that you should keep a close eye on when it comes to Nifty index. Now comes the important contributor, which is banking. So banking outperformed the index, but there are a couple of observations that before we talk about our view for the next week. So you can see this decline, this trend line breakdown in the banking index in the last downswing, but it didn't breach that March lows. We were discussing this area, like this area it should hold for any recovery, and it strongly upheld that area, and gradually we saw that it inched higher, and just like Nifty, it's also inching towards this crucial resistance zone of the medium and long term moving averages. So what is important for the banking index to maintain this momentum, which we are seeing right now, is to cross 35,500 decisively. Means to cross this moving averages resistance to maintain this bias, and in that case 35,900 to 36,700, that could be the area basically where the bank Nifty could be approaching. And importantly, what we have been observing is that the private banking majors, they have done well. In fact, contribution from the PSU pack is also pretty decent, but still we recommend our view that SBI from the PSU space is something that we feel is a best candidate from the PSU basket, because this is the only stock which is trading closer to its record high. The rest, they are still witnesses rebound, but as and when the market witnesses pressure, we see the similar kind of a trend in the other PSU names. So apart from the private banking major, only SBI looks firm to us. So this is something on the upside. So what if the market correct? What if the banking index could not surpass 35,500 levels decisively? Then 34,500, this area, this gap would act as an immediate support, and then next close to around 33,800. So this 33,800 to 35,500, that would be the area basically where Bank Nifty is going to face support in case if there'll be any dip. So as of now, indications are in the favor that both Nifty and Bank Nifty might consolidate further after the recent up move, and considering that we have major hurdles also in front of us. So the idea is to continue with the focus on sectors and themes which are doing well, and try to identify the opportunities accordingly. So keeping that in mind, we have identified few stocks, both which can do well, and stocks wherein we may see some underperformance. So first we'll start with the stock which can do well from the current levels. So pharma, though we have not seen any major participation yet, but the pharma index we feel has a potential to do well from the current levels. And within the pharma space, this stock, Dr. Reddy's, looks very strong to us. Reason because the stock has been witnessing consolidation for almost 5-6 months in a broader range, and currently is trading at the upper band of that range. So possibility of a breakout is high, considering the kind of traction that we are seeing on the upper band, plus the moving averages support that we have on the daily chart. So there's a possibility that we might see a breakout in days to come. So close to around 44.50, that could be the area basically where we'll get the confirmation if it closes up the same, and then the stock could march towards the level of around 47.50 to 4800. The view would negate in case if it breaches the previous swing low close to around this 41.50, this area. So as of now, indications are favorable, and it could outperform in the days to come and in the next week as well. The other stock which we like, on the positive side, which has the potential to do well from the current level, is Jubilant Food. So this stock has a tendency to retrace to these major support areas. You can see this, and we have a similar trend line also support which coincides with the long-term moving averages. And this stock in the last 2-3 months have formed this base around this support zone. So indications are pointing towards a possibility of a strong rebound in the weeks to come. So this stock should be on your radar, especially for any long trades. So both Dr. Reddy and Jubilant Food on the long side. Now comes the Chola Finance. Chola Finance, though is a very strong performer within the finance space, we have hardly seen any retracement in the stock. But from last couple of weeks, we are seeing this stock, witnessing pressure. In fact, it's making lower highs as well. But at the same time, it's holding this zone. So this is important that we are not saying that Chola Finance is a short or Chola Finance is a weak candidate. But yes, it could underperform the market. It could underperform the sector basis on the kind of formation that we have. And in case if it breaches this level of around 600, the selling pressure may extend further. So in case if there'll be any profit taking or a retracement in the market, you might find opportunity in Chola Finance to go short in. So that's the area basically where one should keep a close eye on. And lastly, on the stock list, we have SDFC Live. This stock was in fact among the nifty losers also, and for the obvious reasons, because the structure looks very weak to us. We have hardly seen any retracement in the recent past, despite the kind of rebound that we have seen in the market. In fact, it is trading almost reverse to the market trend, and this breakdown below this 540 level, this trend line, may result in further declines in the immediate futures. So that could be the area basically where we may see the underperformance continuing. So both SDFC Life and Chola Finance could be the candidate wherein we see underperformance in the next week. So just to summarize, what we have discussed so far is that Nifty and Bank Nifty, both the indices have potential to do well with some intermediate consolidation, with some intermediate pause, because we have already seen a very decent rebound of late, and they are inching towards the crucial resistance areas also. In the meanwhile, the stock specific approach, the sector specific approach, which is yielding decent return, should be on your focus. So auto, FMCG, they have done exceptionally well. Now we are seeing the banking and financials also contributing to the move. But when it comes to stock specific move, Dr. Reddy, Jubilant Food on the long side that one can consider. And similarly, in case if the market reverses, then Chola Finance and SDFC Life, these could be the candidate wherein we may see profit taking. So this is what the entire structure that we had for the market. And yeah, with this, the presentation ends. And now we have a brief poll. I'll request Komal to please initiate that brief poll, and then we'll start with the Q&A session. So in case if you have any questions, you can put that in the Q&A tab. But before that, quick poll, Komal. Yeah, so can you please quickly fill this poll so that we can start with the Q&A sessions. In meanwhile, in case if you have any question, you can start putting in the Q&A box. And please make sure that the questions are pertaining to the presentation that we have shared, wherein we talked about indices, both Nifty and Bank Nifty, and we've shared observations regarding few stocks also. So any questions related to these stocks and indices, definitely you can ask your query in the Q&A box. We'll wait for a few seconds. Meanwhile, please complete this poll so that we can start with the Q&A session. All right, we'll begin with the Q&A session now. And Pashupati, he has asked about the agrochemical space after the China opening up. So this sector, Mr. Pashupati ji is have done well, exceptionally well. And yes, there were certain challenges when it comes to the raw material and other things due to the lockdown, severe lockdown in China. So with the reopening, obviously this space would gain traction, but at the same time, especially the stocks which is in this sector, they have done exceptionally well in the past. So now we are seeing some sort of consolidation and profit taking in some of these names. So now I would recommend keep a close eye on the earning season for these stocks for clues like what could be the future and which stocks which are doing well and likely to do well. So, Mr. Ajay, we are not answering any stock specific question. Anything related to indices, please stick to the queries. In case if the time allows, we'll try and come back to you. Okay, so Ankit Jha have asked, can we make fresh short position in the banking sector from this level? So Ankit, that is what we have recommended because in a way that yes, we are closer to the resistance area, but it's not looking weak to us. So the idea is we need to be very cautious and very short term, this 3500 might act as a resistance, but the kind of traction that we are seeing in the private banking majors, it might take off this level as well. So fresh shorting at current levels is not recommended. In fact, in case if it witnesses any dip, you should look for buying opportunity. But since we are seeing erratic swings due to the overnight fluctuation and other things, it's prudent to stick with the option strategy instead like going naked long and short in futures. So Mr. Siddhartha, as I have requested, please stick to the queries related to the sectors and stock that we have discussed. Okay, so Ganga Devi ji have asked for that, will the auto sector continue to move up and is it okay to take long position further at this level? So see, one thing which we have observed is that this is the only sector which in the recent past have done exceptionally well and outperformed the benchmark by decent margins. And more importantly, the sector have made a new record high as well. And in fact, several stocks from this sector are trading at the 52 weeks high or at the record highs. So, potential of doing well from the current levels is high, but now it's prudent that you should choose well. So stocks, those who have already done, so we can't name the stock on the basis because we have this, compliance challenges, but stocks, those who are trading at the record highs are closer to the record high, please stick to those names. Avoid others. Largely, most of these stocks in the sectors are doing well, but you need to maintain stop losses also in case if you're initiating very short-term position, because now we are entering into the earning season, and in case if there will be any negative surprises from the earnings, that might result in some profit taking in the auto names also, because they have already done exceptionally well. So Manoj, we have discussed about for the next week, for the entire month is very difficult to say because the kind of erratic swings that we are seeing globally and in the India markets. But as of now, indications are in the favor that we are inching towards 16,500. And in case if it breaches that level, then 16,800. So these are the two areas basically where you should maintain as a target for the near future. See, raising hand is not an option. Please, in case if you have any question, you can put in the chat box itself. Okay, so we don't have any question in queue now. So we can, okay, so we have one question now. Okay, so when I've asked for like, is it good to invest in the IT sector? So yes, IT as a sector, we have seen a very strong, correction in the recent months, and now some of these stocks are witnessing decent traction. Plus, the valuation comfort is also there, but you need to be very selective with the TCS number, which is scheduled, in some time. Will set the tone for the IT pack, and the more important aspect would be the management commentary, considering that we have this news of recession in US. So that factor would come will remain on the market radar. But as of now, we can selectively look for buying opportunity or investment opportunity in TCS. Next question is from Mr. Manoj. Is defense sector still attractive? So yes, Mr. Manoj, the sector has done well. In fact, it has outperformed several sectors in the recent months, and we are still seeing traction in the stocks like HAL, BEL, BDL, and we feel that this sector has potential to do well considering the kind of focus that government has on this particular sector. But now, again, I would say that since we are entering into the earnings season, any positive negative surprise might derail the momentum. So in case if you are looking for a short-term trades, do maintain stop losses. See, please stick to the queries related to the sectors. It's okay that we can answer those questions. See, Ajay, we have a recommendation on Maruti in Religare. So this is one stock that you may consider after taking advice from your financial advisor. Yes, so I forgot to add during the webinar that we still feel that metals and energy are the two sectors which one should continue to avoid. Though we may see some rebound in between due to the oversold positions, but as a sector, we are still seeing multiple challenges globally also, and at the domestic front as well. So we might see a rebound in the sector, but the overall trend still look negative to us. So avoid metal and energy. Shatabdi ji have asked for like mutual funds. So mutual fund is not our expertise. So sorry, I can't answer this. So Bhavin, we have already answered this. The sector to avoid is metal for sure, and for a time being, and the energy pack as well. So Navneet have asked that the banking index. So that is what we have shared, Navneet. Ki yes, the banking index have performed well. That's why we are seeing this, put call ratio, which is high. But it doesn't mean that it's going to reverse. So we might see this situation changing in case if it consolidates for some time around the current levels. So that position might also shift. So as of now, 35,500 is definitely a resistance. In case if it fails to break, then we might see some bit of profit taking, but otherwise, the trend is going to remain on the positive side. See, chemical sectors, we have a question in chemical sectors. So chemical sector, again, like, agrochemical that somebody have asked for this. We have seen a very strong performance in the past, but now we are seeing all these stocks are also witnessing pressure in line with the other sectors, but comparatively they are still in a better position. So please look for clues in the earnings in case if the companies manage to hold the guidance for the coming quarters. You can definitely continue to hold your positions. For the very short-term trading, it's prudent to please speak to your advisors and to get the advice. So Pashupatinath, Jubilant Food, this zone close to around 570-75, if I'm not wrong. Just let me recheck once. Yeah, 575 is close around that level. Yes. So the major confirmation would be above 595 for Jubilant Food that we have discussed. Sorry, we can't answer these stock specific queries as I mentioned earlier. Battery stock owners saying, these sector is under pressure despite the kind of traction that we have already seen in the auto and auto ancillary space. That be it the tires, they have done well, OEMs, they have done well, but battery stocks are not witnessing similar kind of traction for multiple reasons, be it the company specific issues or the demand related issues. But now we are seeing a bit of consolidation stock like Exide. So that could see some traction, but overall, I would recommend please focus on the sectors and stocks which are trading at the record high or at the 52 weeks high. Even if we are playing a rebound in the bear market, because what it shows is its strength in the inherent strength in the particular sector or stock, which helps the stocks to gain higher and gain the higher ground when the markets rebound or extend the rebound. All right, so we have answered all the queries, I guess. Yeah. So thank you everyone for joining in, and next week also we're going to join around same time at 4 o'clock. Till then, goodbye. Thank you.